Hi there. Great to be here. Um, yeah, and I just want to share, it's really just more of a quick awareness for miners that what Dharma Capital has done is we've created we reference is basically a Filecoin asset swap, and it enables miners, both large and small, to be able to gain access to the token and really basically avoid some of the very extremely high lending rates and borrowing market. And just a very quick intro. Dharma Capital, digital asset risk management advisors. We are a commodity pool operator and commodity trading advisor, as well as a swap firm. So that means that we're registered with the CFTC, and a member of the NFA. And basically what we do within the ecosystem, um, we obviously have a significant asset management side of the business, but we also look to create different kinds of innovative financial products to help the participants either hedge out their risk or gain access like this to different assets. Uh, just to make sure everybody kind of knows what is a swap. Really, all it is a derivative contract that two counterparties enter into, and they'll exchange either cash flows or assets. And it's really just almost a balancing at all times. Um, and as I was saying, the today the market has essentially ranged from being able to borrow Filecoin at 1% a day or annual or even 100% annualized. And to help the ecosystem grow, we worked with Protocol Labs, the foundation, just to be able to provide this kind of offering where I would just say it's a below market offering, just to encourage more growth and more capacity. And so what I thought I'd do is really just call it, what are those pertinent terms? What does that swap look like? So that for any of the miners that out there that are interested, this may be an option to help them. And so typically, what that swap looks like is the duration is 6 months. We are looking at extending that out. We understand that there's some issues for miners on being able to carry the assets for a longer term and being able to earn more tokens. And so that over that 6 month period, what we do is we basically use a reference rate to get to what is our dollar value of the swap. Basically, we call that the notional amount. And that notional amount is then the driver for us to figure out how much assets are we putting out there, right? So we may, for instance, we would have a notional. Let's say the notional amount is $100,000, fairly small transaction size. And what we do is we offer that out. We offer out, let's say, that 5,000 or so Filecoin, and against a certain percentage of other collateral. And that collateral either be USDC, Ether, Bitcoin, uh, just a very hyper liquid asset that we can then take on. And and essentially what we do then is we enter into this swap, and every 2 weeks we rebalance. So similar to if somebody's ever done a collateral loan, this is the same idea, right? That we're always making sure that we're in balance, and our collateral ranges are from 100% collateral up to 150% collateral. So again, if it was 150%, it would just be 100,000 in Filecoin versus $150,000 in any of the acceptable collateral side of things. This rebalancing that occurs every 2 weeks, essentially what we do is we take those assets, mark to market them, and we include any of the interest cost of the carry to be able to then have that in balance. The idea of this, it obviously, crypto assets move a lot more than being able to just rebalance every 2 weeks. We understand that this isn't something that a miner's business is to constantly go through a rebalancing process, and so we're taking on that larger time frame gap to basically just be able to say, okay, here we know that this is more of a facility than a true lending exposure. The interest rates that we charge, again, it ranges by, obviously, if we have more collateral, it's more security, so we have a lower rate. The interest rates are essentially have ranged between 13% and I believe up to 27%. Again, if somebody was posting, 140, 150%, then we're obviously on that lower end of the facility. We also, just to call it, set up the swap facility, we charge 50 basis points, and that's basically just to put the contract in place, and then have an ongoing cadence, for the swaps. All of the swaps, they are basically, the documentation is generated and referenced off of an ISDA master agreement. ISDA stands for the International Swap Dealers Association, and essentially it's a standardized agreement that most institutions in the world use when entering into a swap. So all we're doing is obviously changing some of the terms or the underlying asset. And the requirement for us to participate with a miner is that they're a eligible contract participant. It's referenced as an ECP. And this is, I would basically just say, akin to being an accredited investor. It is a little bit different, but it essentially is to say, here is an understanding of investing assets, as well as then a dollar of net worth. And what we do with all of our swap transactions then is that they go through what's called a swap data repository. We use the CME, which is a very large exchange in the US. They also act as this SDR. And what that means is all of those swaps that we generate go through them, and then those get funneled into our regulator, which is the CFTC. And that kind of gives an umbrella of really what are those specific areas. All of the talks earlier, and I assume that after this, are really going to are parts of what help us support how much Filecoin are we lending out to each of the miners. So as I said, that what we typically do is we enter into 5,000 Filecoin swaps at a time. And we may do that with a counterparty a few times, even just after a couple of days. And the idea is to track what their growth rate is, what their capacity is, what the impact of us giving that little bit of tokens to then continue on to provide them that type of service. And so we're just looking at it as, do we see them acting as a good actor or a bad actor, right? If it's essentially us lending out tokens to a miner, but then they just use that to sell in the open market, that doesn't really help facilitate what our support within the community. And so then we would just pull it back. And obviously on the other end of that, those good actors, that's where we really look to forge a great relationship to figure out how can we help support more. What else can we do? So all of those metrics of tracking and reputation are really, for us, we're looking forward to more and more of those to be able to support our decision making. And then I would also just say that as we've been doing this, It's been great. We've forged a bunch of new relationships with existing miners, and and understanding what is their business model, how does this work, and what kinds of risks are out there. Uh, I basically had my first in-person meeting in the last 6 months, yeah, 2 days ago, with a large miner who basically we started to kick around the idea of how could we hedge out gas risk for them. And so I think it's, it's really more to say that we're just trying to figure out of how do we help at least one eliminate this type of issue for the miners, or at least reduce that, and obviously reducing the volatility of what that cost is helps them run their business. And I also look forward to working with the different groups to really encourage what I would call just a small miner initiative, and supporting larger miners on building their business. So, and if any of the miners or if people have questions on this, I encourage you to reach out. We can be reached at info@dharma.capital, and happy to go through any of those things for you.